We had the markets trading lower for a second day running. Take us through what you're expecting for the trading week ahead.
I think compared to last week, we have earnings announcement really were the drivers of the performance of the market last week. And I think we can expect, I think, a tempering of the market with the results that East African breweries announced. Obviously, as you have indicated, they were rather disappointing due to the finance costs. And I think that has played a role in tempering the upsurge in the market that we've seen over the past few weeks. The other factor I think that also important is that as we near to the general election, I think that is also a key factor that will determine the level of investment activity that we see in the market going forward.
Before we drill down into East African breweries' results that were released, as you say, on Friday during the course of the session, Einstein, let's take a look at the political temperature in the country right now, because we've been reading headlines on this end regarding blasts over in Kenya and, you know, violence that's spurring up as a result of the run-up to the elections. What's sentiment like on the ground right now?
I think the sentiment is obviously we are coming from a situation where in 2007 and 2008 we had a situation on the post-election violence, but it appears right now there are a lot of efforts being made on either on the security side and also on the logistical side with regard to the preparation for the election process to ensure that all measures are addressed in terms of security. As you mentioned, there was a blast in northern Kenya, and fortunately there weren't any casualties other than the suicide bomber, but that obviously creates a sense of tension. But I think the security forces are really working overnight to try and ensure that all measures are in place.
Yep, but let's take a look at foreign investor participation. And I asked the question about sentiment because it seems to have had an effect on foreign investor participation. We had that activity dropping to 45.7% of total market turnover compared to 44% in the previous session. I mean, what do you make of the kind of foreign investor participation you're seeing in the market right now, and what room that opens up for local investors?
Yes, I think it's a combination of the effects of the earnings results as well as the expected entry of the local, particularly the institutional investors, who now see an opportunity to participate in the market, ahead of the election. So I think it's a complement of those factors, and I think the expectation and the hope is that we will have a peaceful election and transfer of power, and thereafter we are likely to see improved market activity at the stock exchange.
Of course, a counter that has always gotten the attention of the foreign investor is that of East African breweries because of its liquidity. Einstein, let's drill down into the numbers here. As we highlighted, we've seen a drop in its share price on Friday's session on the back of its results, but surely nothing unexpected. We saw the financing costs that this company incurred as a result of a buyback of Kenyan breweries' shares, and this was a deal that was struck in 2002, so certainly something that the market was well aware of.
Yes, I think this arrangement goes back to 2002 when the company had to enter into an agreement with SABMiller on the exit and their participation in the Kenyan and Tanzania markets, and that involved participation in SABMiller taking up a 20% stake in Kenya breweries, and the vice versa in the Tanzanian market. Now, in 2010, 2011, that deal was now nullified, and East African breweries had to buy back the share of Kenya breweries, and also exited Tanzania breweries and sought to buy a stake in Serengeti brewery. So these transactions already required a significant level of capital outlay, and so the company incurred a significant borrowing obligation. And I think that therefore, as you quite rightly put it, that is something that was the market was well aware of. But I think the foreign investor sentiment was also quite bullish at the time, particularly at the beginning of this year. But as you said, nothing surprising. It was expected that this would have an impact on the company's profitability.
What's your outlook for the company moving forward, looking at its growth and expansion strategy that it's currently got in play, Einstein? Because it's as a result of that we're seeing a lowering of its dividend payouts, and that's certainly affecting investor sentiment as well.
Yes, I think one of the biggest, the major factor that one has to bear in mind is the fact that probably for the next 4 to 5 years, the company will have to, pay out quite a huge chunk of its cash flow to cater for the borrowing that they had to take up because of the acquisitions. The other factor is, and therefore that accounts for the lower dividend payout. The other factor, I think, is the fact that if you could look at the results, it was quite clear that in the Ugandan market that was also presented quite some challenges. Although in Kenya and Tanzania, those markets continue to register quite significant growth. So I think the key factors would really revolve around managing its cash flow in order to meet up the financial requirements, and also trying to deal with the challenges in markets like in Uganda.
Of course, East African Breweries is not the only company that's pursuing an aggressive expansion strategy and targeting a territory like Uganda, Einstein. We've got Uchumi Supermarkets planning to open a second branch in Dar es Salaam and another in Uganda, deepening the chain's foray into neighboring countries. What are you making of that strategy right now? Because Uchumi only recently having gotten back on its feet in the domestic arena.
Yes, I think the company now has feels after the very good results in 2011, and the company now feels confident to venture out into the other markets. Obviously, there has been a long history of the performance of the company, and I think that has resulted in the company, not being able to venture out aggressively like its competitors have. And obviously, the retail market in the region is growing significantly, and they therefore felt that they need to get a share of that market. So having had a very successful business in Uganda, as it is the branch in Kampala, I think the next strategy therefore was to seek to get additional capacity in that market as well as in Dar es Salaam. So I think the opportunities are therefore quite promising, but I think it's also important that they have to play a catch-up game, because their competitors like Nakumatt have been in those markets, and therefore will not waver in continuing to grow that market.